Good morning. It's Friday morning. I'm Grady, and we are on the charts. Let's see here. Excuse me. This morning, the news catalyst for this morning is going to be unemployment. The rate is 4.2%. It's coming in alignment with the 4.2% that was forecast. So that it met expectation precisely. The non-farm payroll numbers came in at 228,000. The previous was on 117,000. The consensus was just about 135K, and the forecast was 100. So it seems that we've come in a little hotter than expected. Around 9:25 a.m., we're going to have a speech by Jerome Powell, and he's going to let us know how everything is going. Um, I'm using trading economics. I have the website just to use their chart. However, the issue that I have is that the what do you call these numbers? Oh, I see the issue here. Sorry, should be UCT4. Excellent. Okay, there we go. These numbers are right now. I never noticed that. I think I clicked that accidentally. Now it's in alignment with our charts and it's in alignment with the New York session. So, um, there you go. So if you ever want to know how to do that, that's how you would do it. So around 0830, which was roughly about, oh, the market is open. Let's go ahead and get to work here. Hmm. So I was looking at the market, yeah, last night and again this morning. Excuse me. And then when I came into the market this morning, I took a look. I did not expect to see such a large press down from the London session range, but we did. We dropped down, we gapped down significantly. Um, which was decent. Off the LS3 range, we came into two standard deviations below yesterday's LS3. And if that's not a familiar term with you, it's a combination of ICT concepts. Um, my expectation today also kind of included a what do you call it? Mm, TGIF, right? Oh. Just expecting that toward the end of the week we may have a rally just to form the low or the weekly candle. With the large push down from the London session, I was also expecting somewhat of a consolidation here. Um, Looking at the prior hour, and I think that should help us a little bit here. We'll go 1 hour here. Looking at the prior hour, and we'll look at the 15-minute chart as well. This is and you know what this is. That's the close of the last hour and the opening price of this current hour. As far as this move up is concerned, and this one as well, only thing that we were able to do when we ran this high is to take out the prior highs, including this one, to run into the low end of this imbalance right here on the 15. hmm We just kind of ran to the low. See, this is what I mean by um, creating views. Um, Started doing something very different with their key inputs that makes just simple, quick, fast inputting problematic. And then you're clicking buttons here, clicking buttons there, and all of a sudden things aren't actually hitting the screen when you expect them to. Excuse me. Okay. So um that's kind of like where we are marked out on the hour. What am I looking for? Well, I would love to see if we close above this hourly chart. My expectations would consider well, I would consider my expectations bullish. We have these two down close candles on the 15-minute chart that has us dropping down into this small imbalance right here. That's a small pre-market imbalance, and that does have my attention. Sorry, I'm trying to wake up a little bit. It does have my attention, right? Because it's always those small pre-market gaps that that you just, oh, I saw it there, and then we hit that gap, and then we take off, and we're all sitting around like, what? And then later on, once we're doing our study, we're starting to see very clearly and obviously, clearly. I need to drink some water this morning. I had some coffee, but I think it's dehydrated me. Mm. I'm really looking to approach the market with a different mentality and a different. You see how we dropped below this gap? We hit consequent encroachment. Now we moved above it, and you saw. I do believe we may have a lot of consolidation style price action. I really didn't have any intention of trading today with the non-farm payroll numbers coming out and with Jerome Powell speaking in a little while. Oh, excuse me. Early in the morning, I mean, I slept well. I had a great, got on my bike, had a great ride this morning. And as soon as I hit record, I'm pulling air like, oh my goodness. Oh, Um, that's neither here nor there. The 2-hour candle is going to close in 24 minutes, as well as the 4-hour candle. I think that's going to be very interesting. What happens in the next 24 minutes on the 4-hour candle? That's really what I'm eager to see. What I'm interested in seeing, or what I am thinking of. How would I put this? Um, what's drawing my attention to that 4-hour candle is it has a nice healthy wick. It's a down close candle with a nice healthy tail, and I would love to see where it closes so we could establish um what opportunities may be below its closing price. Maybe here, maybe we run the low, we take the low out. Um, we did just barely eke above the high of this candle in the 15-minute, and we turned over. Speaking of small pre-market imbalances, we have this level here we traded to. We're well below London session. If we were to take a look at the opening range gap that was left from yesterday to today, it's similar to what we saw the last few days, except that there is um, no retracement, no pullback, no attempts at any point to run to the physical encroachment of this area. Okay. I see us kind of fading here. We ran up to that small gap and then we started to fade. And again, I'm not really in a hurry to take any type of a trade off the open because if it runs away and leaves, that's fine. Oh, what? Excuse me. If it runs away and leaves us here, that's fine. 20 minutes left in the 4-hour candle. 20 minutes left in the 1-hour candle. I'm a button pusher. I like to push the buttons. I like to clickety clickety push the buttons, clickety clickety push the buttons. What I found is no matter how much you enjoy pressing the buttons, the market will take your money. Mm. No matter if you feel like, you know, today is your day, right? You feel like that all day long. I feel like today's my day. I feel like today something great is going to happen. The market will take your money and you will realize that it wasn't your day. It wasn't your day because the market isn't doing it. It is not trading your day. It is pricing something else. Is that the first? That's not. Is that fair value gap? I don't think it is. It doesn't look right. I mean, I see the two up close candles. One, two, three. Then we traded up above that high to the gap, and then we moved down. Is that fair value gap? It's a gap, and this is the best part about it. 19 minutes. I mean, look, it appears that we're coming into the close of the hour and the close of the 4-hour candle very aggressively. Mm. I don't want to drink any more coffee. I feel like if I get my mm, feel like if I get my caffeine levels up too high, I'll become extremely impulsive. Oh, hour 15. Let's go to 5. There are is it 1 minute? Hmm. I just had my eye on this area here. There's a small break in price where we traded into this gap and then we moved up. Here we are with 18 minutes left in the hour. We dropped back down toward the low of the 4-hour candle. Hmm. Hey, I mean, very quiet today, right? Very quiet today. And this is also something that was my expectation because of the tariff news. I almost felt like the non-farm payroll news would be completely overshadowed by that type of volatility. We just took the high and the low of the prior closed candle just now. This current down closed candle is above moved above and below the prior up closed candle. Hmm. No, my favorite was not a good place to look. 15 minutes left in the hour. 15 minutes and 47 seconds. I did not do well finding the first presentation fair value gap. To me, this looks like an odd range of unbroken candles. I know this is a pre-market gap that we traded. I don't know what this gap is or why I pulled this one out of my hat. This one in particular, Control Z. That one in particular, it looks a little sloppy. I'm going to delete it. Um, I saw several other days is that the first gap really didn't form in this very first break of price. Sometimes it's right along the opening price. Sometimes it's just later. It just moves in a different place and then it forms later in the day. But probably in that first 45 to 50 minutes. The last 50 minutes is going to introduce us to the hourly macro. In the next 5 minutes, we're going to see the hourly macro form. We're looking at 45 now, 9:45 a.m. EST. A little bit distracted today. For all of the Path of Exile 2 fans, we know that we got a drop coming. So once we go into the weekend, I'm gonna put a few hours into that, get my mind off the markets. Mhm. So at 9:50, the macro begins, correct? That's correct. Hmm. I've had this odd experience where by the time it's 10 a.m. By the time 9:50 arrives, 9:50 is not delivering opposite the move. I think for a while I had myself convinced that when the macro began, the macro ran opposite the direction that the move is going to go. That the macro was delivering us to some sort of a liquidity pool or PD array that's supposed to set up the move. It's 9:45, and I was looking at this level per right per right here, and I feel more like boom, boom, bop, bam, right? Let's see what happens here. It's 9:47, 3 minutes before the beginning of the macro. Mm, mm. If we break above all of the prior down close candles, we would seriously be setting ourselves up properly for a move to the downside. But perhaps we are just going to attempt to close that gap. We're at the low of the opening range gap right now. Mm, mm. 7 minutes left in the hour. So we drop down into the wick of the prior. Oh no, I'm looking at a 2 hour chart. We just drop down to the wick of the prior 2 hour candle to right here. Maybe some type of fair value gap. Doesn't look like one. It's hazy because of the 1 minute price action. We'd have to bring it to like a 2 minute chart or something. Regular trading hours. So no electronic. Clean it up a little bit. Oh, there it is. $9.49. Mm-hmm. I'm glad it's Friday. This is one of the first times I've said this, and I'm actually glad that it's Friday. This week has been extremely um off-putting because number one, I haven't had the type of success this week that I really enjoy. And that's it. I'm really ready to start next week off and see if we can accomplish something, accomplish some of the goals that we've set for it. And those goals are being, um, what are we doing here? Come on, what are we about to do? What are we about to do? Something's wrong. These charts don't look the same. All right. Okay, I'm having one of those days, y'all. Yeah. I'm looking at the chart and I'm not seeing anything. I don't see crap. It's hard to describe. It's hard to describe. I'm looking at the chart and I see the colors, but I don't understand what I'm looking at. And then when I watch other traders and they do their little posts, guys are an 8 minute pullback to the such level, and I'm like, I'm looking at this and this just looks like trash to me. It looks like back and forth trash, back and forth trash, back and forth trash. As soon as I said that, there is one thing that I did see. You see how we came in and we had this little level right here? I don't know if it's on the 15, but we had this one up close candle on the 15-minute chart. We left this candle, we dropped all the way down here, and then we came all the way back up above that up close candle. So in this range of this up close candle, we dropped all the way below it considerably. Then we ran above it considerably. Then we dropped back into this level and kind of sat. And I remember I said this the other day that I'm a little slow, so sometimes it's just the way it is. So I'm just measuring from OTE from the lowest range to the highest range, and I'm doing something right now to compensate for the early morning malaise. Boom, push. For the early morning malaise, 3 minutes into the macro. Now, what did I say before? I was expecting something along the lines of a what is it? TGIF, right? I was expecting something along the lines of TGIF, but I think maybe a run to close the open range gap may be it. That may be the only thing that we get today. Here we are. Now we're just tapping the low of the open range gap. We're below it again, just by a penny or so. Hmm. 9:54 a.m. Hey, let's try that again. Let's try this again. Low to the high. Reverse it. Hmm. We are consolidating. Mood is very agitated by this form of price action. Hmm? You see how we were at a 62% retracement from the high? Everything that we've seen kind of in this area has been in the premium, if you will, from the high to the low. And the reason that I'm saying this stuff is because, again, like I said, right now I'm fishing for something. Well, Grady, why don't you just get short, right? Look. Well, you don't think I thought about just flat getting short? I could go ahead and I could just look at the 1 hour chart, like like many people would have done. Look at the 1 hour chart. Well, what did we do? We went up above the close of the previous high candle, and we placed a wick. Yeah, that's great. That's great. We also ran the low out, and we're middling right here. For people who've seen this hundreds of times, they know what's about to happen next. I don't. This is the end of the hour. 2 minutes coming to the end of the hour. Yeah, and this thing is sort of just middling right here. And because it's doing that for me, I know I can't get involved. 2 minutes left. We're coming into 10 a.m. Low to high. Drop back in 50%. Hit that small little imbalance area. Pop up 62%. Drop down. Move up. This is that very first imbalance that I saw pop up. We tap into it just very lightly. Right at 10 a.m. Go right past it. Foreign payroll. Keep your money in your pocket, Grady. Golly, I'm so tempted. I was so tempted. I said it out loud, so that's what I'm gonna do. I'm keep my money in my pocket. Okay. The only 2 things that okay, so here's my ambivalence, right? These are my 2 conflicting thoughts. Again, today, taking out this high, coming up here into this imbalance from the higher time frame 15-minute chart, hitting consequent encroachment of this area, probably about 10:10, a little bit after 10 o'clock, turning over and then going lower. Okay. Then the other idea is it's the end of the week. We want to close with a wick on the candle, right? At the end of the week. That means that the low, well, the low does not necessarily need to be secured, right? Because we could take our current low, the one that we made in today's pre-market, we could run it out, and then retrace later, right? So we could run the low out all the way through lunch, all the way into early PM session, and then have a late rally going into the evening. Mm, there's a lot going on here. So, yeah, I mean, okay, guys, you guys are gonna witness. You're gonna see me do it. You're gonna see me do it live here. You go ahead and say I'm not gonna trade on non-farm payroll, and then I'm just very tempted to reach out. See, because the thing that I know about me or believe about me, those are 2 different things, is that I believe that if I took a trade, then I'll be able to see the market clearer. Just sitting back watching price, I'm just looking at the price, go back and forth. I don't really have a as they say, a dog in the fight until I get ready to say, this is my entry, right? When I say, oh yeah, I'm getting ready to get in, then all of a sudden um another level of QC kind of activates, right? Well, if I take this trade, then what's my risk? Where could price be in the next few minutes? Okay, well, let's just say this. Next hour just opened. We drop down into the body of the prior down close candle to hit this imbalance here. We have to remove a lot of this stuff. We drop down, hit consequent encroachment of this imbalance inside the down wick of the inside the wick of this prior down close candle. Because because the body of this candle is so high, it looks to me as if it wanted to close lower. It went all the way down here and decided to close nowhere down here. Sorry, wrong chart. It came all the way down here and it decided not to close anywhere down here. I'm not closing down there, and I'm closing down there. It sat down here and it moved around and moved around, moved around, and it closed way up here. It's kind of bullish to me, at least in the short term, at least on this one particular hourly chart. Mhm. Another thing that's discouraging to me as well, w- another thing that's very discouraging to me as well is the, how to put it, the length of the wicks on all of the candles. Almost every wick is twice the length of the bodies of the candles that they're connected to. I don't like that at all. There we go. Stand up and walk around for a sec. Hindsight is 2020. This current 15-minute candle closed at the low of the prior 15-minute candle before we turned over. I don't like any of the price action going on here because, to me, the only thing that's in my favor of possibly an entry being here is the idea that we're running the macro right now. We're in the macro, blase skippity doo. However, again, it's non-farm payroll. Normally today and Monday is going to have very tricky price action. A lot of consolidation, long range back and forth, really moving nowhere. 4 hour candle is dipping down into the wick of the prior 4 hour candle. Very, no, well, about 25% into the range. I can't say that's very anything. And we just ran below the closing price of the down closed candle to the left there. This is just like I thought. Something's not right. What is it? What is it? What is going on here? 3 mini NASDAQ June. E-mini NASDAQ June. Market open. Something's up, and I'm glad I have a record of this. But um, Trading View isn't updating. Um, my system is online, but it's frozen. I'm adding notations on another screen over here that should be appearing here, and they're not. Like like this. On my other screen, I have, let me pull it over right quick so that I can show you. This is the 1 hour chart. That's a 1 hour chart. This says NQ 12 such 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 main, right? NQ 12 such 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 main, right? So I'm NQT 24 main. Same chart. They're not synced. I've added this additional input here at the low of this candle, and it's not synced. But they should be because it's the exact same chart. Keep drawings, link drawings, link drawings. It's on my screen. And for a second there, I thought, well, maybe it has something to do with my Wi-Fi. The signal's strong and connected. But no, that's very interesting. I'm glad I had that recorded. That's why you guys need to record your trades, man. Record your trades. So later on, when you have a complaint about the system and you say, oh, the system did this and the system did that, you can you actually have documented proof of what you're talking about. Because just as that input did not cross over, in the same way, the input would not have crossed over if I'd have taken the trade. Huge distraction. There are some people looking for this entry and they're trying to line up their trade. They're using multiple charts and they can't get they can't get their charts lined up. That's crazy. Wow. Wow. And you notice if you go back a few moments, notice how the moment that I'm doing this and I said, oh, look, we crossed that level right there, right? Notice how for that time period, and you could probably just time it. For that time period, I'm more concerned with that than where price is. And that's what I was saying at the very beginning of the trading day. I said trading view has some very weird things that happens with the way price inputs on the screen. Let me try something. That's internal. That has nothing to do with my system. That's on their end. That's server side. Because let's say my inputs failed to cross over to cross how would I put this? Failed to upload, right, to their server. Well, why do I have it on my screen, right? Why do I have this all over my screen? Now I have these multiple lines all out here stagnant, and the computer is over here tripping. Look what it's doing on this other side. Be careful, y'all. This is not an accusation of tampering or corruption. It's just something that, and I saw this on Trades by Map one time. It was a big news day, and all of a sudden, something happened. Yep. Well, I'm going to upload this video just like this, so it's not an issue, and it's not a trading day. And that's why I said, look, I'm not trading on a high news day like today. Let me see if I can, going to see if there's any information about TradingView having issues, or if it's just me. Okay, well, this happens. This happens. It looks like I'm having some sort of a internet issue, which is wonderful. That's real quick. Okay. Okay. Well, I guess reporting a dead screen is not going to help. But, on these news days like this, again, oh, I forgot. Let's see if I'll go ahead and hit my hotspot. That should keep us going at least until 11. Let's see how I do that. There we go. There we go. Okay, we're back. And again, we're going to restart Trading View. Moved over to my hotspot. This is something I used to have to do all of the time when was at work. I never wanted to connect to my um when I was at lunch. I never wanted to connect it to their network because you know how people are sometimes. It's just that they like to express their ability to influence outcomes, right? So a slight move down off of this information, but most people seem just to be waiting for Jerome Powell to say what he needs to say. And I'm very curious to see what that is as well. I had to restart my network and I had to restart my network and now I need to figure out whether or not I have internet anywhere. I'm back. Okay. Anyway, um, right. All right. Where were we? Right? Where were we? Where were we? Never a dull moment. Oh, I'm not trading. I'm not trading on non-farm payroll. I'm waiting on Jerome Powell to speak, and then um, we'll probably shut this thing down in the next 30 minutes. Um, see what Jerome has to say in the next couple of minutes here. I might even pull that up and see and kind of. Oh, it's my back. It does look like a nice little short here. It looks like a nice little fair value gap on the 5. All of the data that I input prior to my network shutting down seems to have just came right back. I'm not sure why. I have these levels on lines. Okay, so let's go to the 1 hour chart. This level appeared from nowhere. My concern was that we were about to go down below this level, right? So when you're bearish, you don't want to close below down close candles. So we have this candle, we moved up and we closed higher. So this is a higher close, this is a higher close. We drop back down. It's a lower close, but it's still higher in this overall range. We put our wick up, took out the high of this up close candle on the 1 hour chart, and then we turned over and we moved down. We moved down here. Below, we open, la, 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 la. Okay, so we close lower. The next candle opens lower, and there's a lot of stuff in the way here, so I will probably do this. This next candle opens higher and just runs up into the body of this down closed candle slightly. But it doesn't really, it doesn't really just cross the closing price of this up close candle. So I'm not really paying attention to it, right? Um, Now we took this low, which means that we closed below this low, and that confirms how bearish we are. This candle ran down here, took that low out, and then immediately got back up there. Now we have a lower low, and a lower low. But that doesn't mean much if these lows are trading into a bullish order block, right? Because the only thing is we're just low, 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 higher low, higher low, higher low, and it's just a swing low into the range. Okay, but this is an hourly chart. We got 33 minutes left, and on the 30-minute candle, that looks like this. Here's where we are on the 30-minute. Now, this also sort of confirms what I was saying, and what I was saying just now is on the 30-minute chart, as soon as I do this, all that other stuff's going to come back. I could go from here to here and pull this forward, and this will be my mean threshold, right? So we're just below mean threshold. This candle touches mean threshold and jumps right back up. This candle opens, slides down below mean threshold, taking out that prior wick, and now we're down here. Down here doing what? 15-minute candle. I would grab this and I'm pulling it down. And again, in my prior videos, and I'll stop saying this after a while. In my prior videos, I find it interesting that most of my trades that I miss because I spend a lot of time trying to confirm direction. And you like saying, "But great, that was like an hour chart. Well, why are you still confirming on the hour?" Still confirming on the hour because of where we are in price and what day it is. Is that if you look at any reversal, higher time frame or not, there are hourly candles just dangling out into the ether, and this is how they set up their reversal. They create a down close scenario. They run that level out. The next level could come right in, and we could come right down to the close of this down close candle on the 15-minute, and then just begin to build right out of it, and then we'll head back in the opposite direction. I'm not that bullish to say that we're going to have a long term or a long range um protracted move to the upside. I'm saying that our Red Chair Powell hasn't even had a chance to speak yet. We haven't heard anything that he has to say, and this is what the market is doing. Personally, just consolidating from this low to that high to this low to that high. Because in that range that we've measured, we're still in that same range that ran above this high and then ran above this low here. As we came in, moved up, now we're back in. 44 seconds left on the 30-minute chart. Oh no, sorry, this is 15-minute. 44 seconds left on the 15-minute chart. On the hour, it looks extremely bearish, but it did on this candle as well. It did on this candle, it did on this candle, and it also, here we are again. And again, because I'm not looking to really take a trade, it's easy for me to say this with this type of levity. Now I've mucked up my entire screen with all of these additional lines. We did not retrade the open range gap. We did trade to this level and break down. I'm gonna highlight that by calling it a bearish order block. I just wanted to highlight the area that I'm discussing right now. We did trade to the middle of that visual order center back. We did trade to the mean threshold. I'm sorry, the consequent encroachment of that gap, and we did displace from that level. Where at what time? This was formed at 10 a.m. and then we displaced to the downside. Fairly clean too, with almost no pullbacks at all. Okay, this little level here, we went past it, moved up, hit consequent encroachment, and then delivered to the downside. This level, as we know, is the 1 hour opening price of the prior down close candle. We get down below that and we keep moving. And we trade to this imbalance. Boom. Well, that forward hindsight is 2020. Yes, I know. No, I haven't traded because this is a day that I really can't stand to trade on. There's too much. And this might be something that may affect you, and it may not affect you the way it affects me. On a day when there's too much opportunity, I get overly eager to get involved in a trade. Oh, wow, today could move 800 points. Today could move at 1,000 ticks. I'm looking to get into that move. The problem is on a day like that is these ranges, like this range, these ranges are that's 200 ticks right there. Oh, we did move 1,000 ticks on that day. Oh, sorry. That's my point. That is my point. Getting short right there was a beautiful trade. Where did all of my technical issues come in today? Around that range. That's why I record this stuff. You guys aren't gonna play me. Not gonna play me. I know you guys went out threatened ICT and told him not to share this stuff, but you guys aren't gonna get me too. You're not gonna get me like you guys got him. I'm already scared. All right, let's stop playing. Let's get back to it. Yeah, this looks like a very healthy displacement to the downside. And Uncle Jerome. I mean, fair pair. The Fed, Fed Chair of Jerome Powell hasn't taken the stage yet. What I'm curious about is where is the short leg and where is the long leg? And anybody who's traded with ICT knows what I'm describing. You ever take this trade and you get out here? He doesn't take this trade, or maybe he does. He takes a little bit from here to there. He takes it. Then he goes to the sideline. He waits and he says, "Hey, I'm gonna come back at 11. I'm gonna come back at 10. I'm gonna come back at 2." And then he takes the long leg of the move. Like this is a quarter of this overall move, right? Or this move drops into here, and then we displace to the upside, finally coming back up, running to the 50% of the open range gap after we drop down into this level. And I'm not saying anything that anybody who hasn't traded for a while doesn't know. Those people who are beyond this, I'm not really I'm expecting you to understand what I'm saying. I'm really talking to the people who are going through this same thing with me, right? Who has this sort of a frustration of um trading at 48%. right? Trading at 48% effective accuracy, 30% accuracy, 35% accuracy, no, 45% accuracy. And for with your 45% accuracy, your wins are $500, your losses are 600. At 45% accuracy. These are the people I'm talking to. But you want to know what I see now sort of well as we're well into the day. Um, I guess Matt shut it down. I think I'm going to as well. It's 10:30 on Friday and doesn't really look like a bang schmangity day. But what I've noticed here is that the volatility of the tariff and news has really superseded the volatility of non-farm payroll. Non-farm payroll is trading practically. I don't know, not really. It still has that back and forth price action. We're still at the very low of the week. This is definitely the low of the week. There are no other lows beyond this. And then having just a slight bit of a retracement sometime after 2 o'clock in the afternoon might help us. I'm especially distracted because I have something in my eye. Because I am curious about what Jerome Powell has to say. And I think that it's not really going to take complete effect until Monday, whatever Jerome Powell has to say. Because I would rather trade in post news cycle than in the news cycle, so that I can get that out of my mind. So I'm not saying, well, maybe at 10:30, maybe at 11:30, maybe I should take my stop loss off. Maybe I should leave my stop loss on, all of that sort of stuff. And I think also much of this sort of random back of banter that I'm having right now is because I've decided not to take a trade, and it's really eating me up. But it really shouldn't, right? And it really shouldn't eat you up. Some of the best, like some of the most eye-opening epiphanies, uh, some of the most eye-opening epiphanies I've had are days when either I've blown my account and I sit and I paper trade the market, or I decide not to trade, which is less rare than the first. But I decide not to trade and I sit and I just watch price action and I take my time to just sit back and look and say, oh, what is it doing here? Why is it going there? And the problem is when I really truly calm down, I feel like the market does too. And I'm sitting here just staring at the market and looking. And there it is. Oh 0546, oh 0545. Last 5 minutes of the 15-minute candle. I think I'm gonna shut this thing down before 11 a.m. East EST. Let's see. Okay. I think this is pretty good for the day. Let's go into the weekend. I've recorded for about an hour. I had all types of issues. Remember, guys, this is really just for trading entertainment. Just so you guys can, excuse me, know what it's like to sit in front of a chart um from day to day. It's not always completely seamless. as far as the way that you would expect your trading day to go. Sometimes there are issues, um, but we keep going, right? And once we iron out the issues internally, externally, technologically, then we can enjoy the fruits of our labor. And sometimes, and especially in this phase that I'm in, it's not financial rewards that I'm really after anymore. We do this for funds, not for fun. Number one. So don't get that. Don't make that mistake to think that this is not for money. Um, but there's a personal challenge that every trader has to face. Again, when we open up the chart and we sit down, it's a personal challenge. It's a mental thing. It's a focus thing. It's a discipline thing. It's a treatise. I think that's the word on our study. Did we study? Have we been studying? Are we in the market looking at price the way that we need to look at price? Or when we look at the market, and sometimes I feel like I'm truly dyslexic though. When I look at the market and I say to myself, I can't really tell whether this or whether that. But as we look at this chart now, hindsight being 2020, when I measured out the fib earlier from this low to this high, and I said, wow, it looks like we hit 87%. Oh, it looks like we hit 50%, 60%. I'll do it again now. I'll do it again now. And then we'll take a look at this leg in relationship from this low to this high with that imbalance here formed at 9/11, trading back into it right at 10 a.m. This is where I believe we were going. This is normally the move that stops me out right here. When we get into the low of this candle that had already traded into this gap, and then we come back and we do it again. That has stopped me out more times than anything. Why? Because I'm looking at this little gap, and then we trade to that little gap and fail. Then we run that gap again and then displace. That's how you're right and you're wrong. That's why people say, man, ITT sucks, man. This sucks. I'll show you now. This is what I say. This is what I mean by when we don't trade and we see these things. High to low, bam. Beef this up so we can see it just a little bit more. All right. Now, my favorite level, the one that I added, and I'm not sure you can go back to the old material for ICT, you might see it there as well. But between the 79% level and the 100% level in the field, I re I reintroduced the 87% level from the low to the high, 87%. When we see price come into this level from the low to the high, boom, we hit this 87% here. We run to 100%. We come back to 85%, 87%. There's something up here that we trade to. We drop back in. Now, remember, this is the market open here. So all of this happens pre-market. We measure low to high, blah, blah, blah. Here, we run up above 87%. Now, point out market structure shift to me. Point out the market structure shift. I'll give you a second. Where's the market structure shift? Where did the market shift structure? Here, right? We close below that level here in the pre-market, and then we run above the high, taking out the prior pre-market high. Then here, market shift structure as we drop all the way in, taking out all of these lows. Now, this level is a singular up close candle on the 15-minute chart. It's a singular up close candle on the 15-minute chart. This level goes way down below it. This candle goes up above it. Um, wasn't there like an engulfing candle somewhere? I cannot remember where I saw it. But I said, man, this down close candle is above and below the prior up close candle. It's back in the video. I remember seeing it somewhere. Okay. Um, this is the level where I was not sure whether or not it was the first presentation fair value gap. Is that it? Is that the first presentation? We trade to it, then we break lower. This move lower is the completion of this run to create the market structure shift in this range. Okay. Boom. Once we displace like this, we get down here at this is where I started saying, what is this thing about 945? Right? Because I understand that the macro begins at 950, but my personal experience has been that most of the leg that I'm looking for happens at 945, somewhere around that range between 945 955. I guess it would be like a pre-macro syndrome. So we run up, we hit this imbalance, we drop back in, and then we press higher. All of this leg is just to get us back to this 87% level. Here's the market structure shift to the low. We move back into this level, and then we displace. All of this intermediate stuff is on the 1 minute time frame. We move to the 5 minute time frame. All we see are down close candles. The high of this candle trades to the high of the 5 minute candle here. Now, what's the issue? Near the high of that 5 minute candle there. And the issue is that it's all pre-market price action. And I think for me personally, it was a little bit more difficult for me because we're so far away from London session. So oftentimes we're going to look at prior day high, prior day low. We're going to look at prior session high, prior session low. We're going to look at order blocks, fair value gaps. We're going to look at um, a lot of the PD arrays that you would rely upon to sort of make a bias, to form a bias. Today, we were so far away from that. This is a prime example of where I need the most work. When we're in a sort of a consolidation range and there are a lot of levels for me to kind of look at, it can be very confusing. However, when we have that extension arm and we're in a continuation has multiple phases. There's a breakaway gap where price falls and then it hesitates for a second and falls again. There's nowhere really to get involved in that short. Okay. Then there is what do you call that? The entry drill, right? I can't think of the term for the entry drill. Then there's the entry drill. It's the quintessential, 50% gap retracement in delivery. But then the move after that um is a retracement to the order block. The move after that is a retracement down past an intermediate order block up to a prior order block into a gap and then the delivery. So every time we see these legs down, it's not as if it's going to retrace exactly to the it's not going to reprice to the same PD array. It's going to utilize one of those PD arrays in succession, either the gap, either the current order block. And what I mean by current order block is it would be much like this on a 2 hour chart, like the 2 hour chart, like this, right? The catalyst that sent this price lower is all inside of this particular up close candle on the 2 hour chart. There wasn't a huge push up into this imbalance above it, then a move down. The move down was created by a slight wiggle just above the high of this up close candle. It just wiggled just a little bit above the high of that up close candle, and that was enough, and then it sent it lower. So we could look back to something similar, which would be these two candles on the 2 hour chart. Well, it wiggled right above the high of that 2 hour candle inside of this imbalance, and then it delivered lower. Then where did it? What did it do? It went much lower, closed, open, wiggled into the wick of the prior up close candle, delivered higher, 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 lower, much higher, and then this delivered to the downside. And so here, there's only one up close candle. Here, there's only one up close candle. Now, and what I'm saying for me personally is that it's gonna take me a moment longer to identify the difference between how to integrate these movements, right? How to integrate these movements. When this candle opens, am I looking for another up close candle, right? When this candle opens, will I see an immediate drop to the downside? Ugh. Like this? And it wasn't really immediate, was it? It consolidated for quite a bit of time, right? Because this is a 2 hour candle, and this is also a 2 hour candle. Then we'll go to the 4 hour chart, and then there on the 4 hour chart is hardly enough price action for us to formulate long range or a thesis on what we believe price is going to do. It's going down. It's going down. It's going down. I think we can all scream that very aggressively because that's exactly what's happening. But that idea of, and I'm just about done. I'm just really kind of vamping to the end of this video. I don't need to stay on here. I just want to kind of get these thoughts out. I'll come back later tonight or tomorrow with another video, something short and sweet. I don't really want all of my videos to be hours long, but they are what they are. Um, and hopefully with this type of trading entertainment, the things that I'm vocalizing are stimulating something in your mind and in your study that you had a question about, but ICT is so right about what he says that he can't even formulate the question of those of us who have confusion properly. You know what I mean? So those of us who have confusion, we're hearing what he's saying, we're watching it, we're studying it, we're repeating it, but it's like, what? What do you mean? Like, what are you saying? And so hopefully what I'm saying is lining up with your confusion in a way where you're saying that's exactly the question that I had. The difference between an inversion or when I said that inversion, I was just looking at this. This would be normally a bullish order block, but we don't. We trade into it, trade out of it, go down below it. Inside this range, we trade back up to it, and then we deliver. That's an inversion. Or it's not. It's not. The inversion. Now, this now but I think this is fair. I think this is fair. This imbalance right here. This imbalance. You see how this gap, had we traded directly to the consequent encroachment of the imbalance and traded down, it would made perfect sense, and we could have all just went short when we traded up into this gap. But it didn't do that. This is what I was referring to a second ago. What happened? It actually ran past this order block. Well, it's not an order block if we run past it. True. Absolutely true. But we wouldn't know if it was an order block until we got past it, would we? True, true, true. Okay, so now we have this imbalance above the gap, right? It's there. We don't stop inside of this imbalance and go lower, do we? No. We trade to the middle of that, the consequent encroachment. We drop down, we move higher. We drop down, hit the high of this down close candle. We move higher to this point, at which point we find the order block, the highest up close candles in this overall range. and then we turn over and drop down lower. So if you were wondering about what do they mean, highest up close candle in the range, highest up close, highest up close, not this, not this one, not this one. This is in the middle of the range, especially when we open here. Now, if that's in the middle of the range, then what do we see here? We see that when this candle is overrun by this long run of up close candles, what becomes the highest up close candle in the range? This is today's price action. This candle becomes the highest up close candle in the range. We drop down, market structure shift, we come back up, remove a lot of this trash, pull this back. And so this is actually showing that there are multiple ways in smart money concepts, SMT, ICT. There are multiple ways to get to this conclusion again. We take the low of that candle and draw it out. We take the high of this candle, no, the close of this candle and draw it out. That's fine. You don't want to work properly. High that candle and draw it out. And again, hindsight is super, super 2020. But I just want you guys to understand that when you start to break it down in your own note taking and in your own time, especially on days when you don't trade, when you just watch the market and you say, oh, I was looking for an entry, right? I was looking for an entry. I'm looking for an entry, right? I'm just want to get short. I want to get long. When you when you when you open up your trading chart, when you open up your chart, or you're watching somebody, or you're studying something, and the first thing you say is up or down. You missed. You missed. Because if I told you down, where would you put your entry? Here? Would you put your entry here? Why? Where would your stop loss be? Why would you have a stop loss? If I got short here off of the 15-minute chart, could put a stop loss at the high of this week. If I believe that this was the order block and we have this wick, why not draw out this wick and look for entries in the high wick of the candle that I consider to be the order block? Let's go to the lower time frame. We're going to break down to the 5. Now that we've broken down to the 5, now we see this on the lower time frame. Is the market going up or down? Look what we had to do in order to identify the market, the what do you call this? The bearish order block. Well, we had to, number one, slow down, take our time, and not try to get money. Step away from the concept of trying to make the money, and we had to step back. We had to look at the market dispassionately, as if there's no money involved whatsoever, and say, what am I actually looking at? Why am I confused? Because you could watch ICT, and one of the most mesmerizing things about ICT's post-market analysis or post-trade videos that's a benefit and a bit of a curse is his specific entry, his accuracy, his profitability. It's like watching Steph Curry shoot threes, right? He's like the Steph Curry of this thing. Problem with it is that you can't take the ball and go out there and pull in the NBA from the logo like Steph Curry with that confidence without having, well, you would imagine that all of the other NBA players have gone through this level of training. But without having that certain something for us, when we're in the market, we will be our own Steph Curry's or ICT version of ICTs. If we can figure out how to get away from, I'm looking for an entry and I'm looking to make money, to say, I just want, I want a specific criteria that that is dedicated and focused on finding what the, and I hate to put it like this, the true order block, true gap, and then ultimately the true entry. Why? Why do I say it like that? Because on the 5 minute, and we take it to the 1 minute, we take it down to the 1 minute, and we're looking at these levels on the 1 minute chart. There's much more. There's much more specificity, although it's very hairy. Maybe this is what this is that thing that I was talking about. Look at all of the hair on these things. Up and down and up and down and up and down. It's almost like there's no real true fair value gap. Now I'll finally come back to this level after I'm out of the market to say, yep, this is exactly what I was looking at. We did close right in that range. Coming back to that level later on, this is what was normally stop me out. Why? Because the market would break down. We trade to the secondary imbalance, then it would deliver further. What's the natural thing to do when you have a couple $100 on your trade? The natural thing to do is move your stop loss down just a little bit, right? Because you want to protect your entry. But if your entry is not way up here, then you have a real problem. Your stop loss is literally my could have been up here above this down close candle, but then I still would have been stopped out here. That stop loss, I'm not sure if I would have had the Cal Balones in order to go ahead and get back in. I might have been so tilted that as I see price doing this, I'm thinking that we're trading off of this gap and now we're going long, that I was wrong. And we came up here, we broke market structure. Now we come back in here to this gap. Now we're going, and I'd be wrong. But it's a very hairy day. And a lot of people probably lost money today because of these wicks. Because normally they like very clean and specific entries because it prevents excessive drawdown. But non-farm payroll, there are more wicks than bodies. Look, there are more, every candle has more wick than body, which means that price is um displacing from a central price level, and it is calculating above and below, but roughly coming right back to the same spot over and over and over. So you're thinking, oh yeah, price made a move away. Let me get long. Price comes right back to that point again, multiple times. Let me get short. Price comes back to that point multiple times in a very tight area because it's so hairy, and then deliver to the downside, which makes you want to go to the higher time frame. But once you go to the higher time frame, then it's even worse. The length of this wick itself is 168 ticks or $42. That's too much. That would be too much drawdown. Oh, here we go. Maybe we will see our TGIF, but I'm not going to stick around for it. I'm going to get out of the. I'm going to shut this thing down. Um, See you guys later. See you on Monday. We'll be back on the charts on Monday if the market is open. I don't believe that we have any news coming up that should prevent us from being able to participate in the markets. Let's go ahead and zoom in to see what we have going on. On Monday, we have balance of trade for Denmark, something from Australia, Canada. We have FOMC minutes next Wednesday, core inflation Thursday, inflation rate. Next Friday, we have a little bit of PPI and Michigan consumer sentiment. Next week should be a very, very good week. It looks like a lot of normal price action, a lot of stuff that we've seen before. Oh, but I think we're gonna consistently have this type of a rant about price action and price delivery, where it could go, where it should go. And I'm just looking at the market as what we just described earlier, as this represented the bearish order block. And to me, it would not surprise me to run past this, to hit this imbalance, and then maybe higher, maybe to this candle, and then consolidate sideways, leaving a small tail on the week, but not giving us anything back. That's my estimate. Okay. Now remember, everybody, be careful. This is trading entertainment. You're going to enter the market at your own risk. Um, and study hard, work hard. For those who succeed, the benefits are immense. For those who fail, um, they tell me it's just because you quit too soon. You just didn't get it, just didn't understand it. Trading is a business, everybody. Be careful out there. Have a good weekend. Bye.